And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to all of you and my futures family. It's time for the market prep, where we're always seeking accurate context, good risk management, remaining patient and tranquil in our trading. Today is Thursday, May the 18th. My name is John Hoagland. Thanks for trusting me with your time again this morning. If you're already in the markets, you probably don't have too much going on. Maybe you do. Hopefully it's going your way. Economic releases this morning, 7:30. The jobless claims numbers came out lower than expected. Pretty much a yawn this morning from these numbers in the markets this morning. The Philly Fed came out not as bad as expected. They were expecting minus 19.8. It came out minus 10.4, but it is the 9th month in a row of slowing factories in Philadelphia. So what's that tell us? Didn't tell us much in the markets here this morning. 8:05, we have one of the talking Feds, Jefferson, speaking. 8:30, another talking Fed, Barr, speaking. 9 o'clock, existing home sales, as well as another talking Fed, Logan, speaking. 9:30, the nat gas numbers due out. Again, the focus is going to be on anything we hear about the debt ceiling. U.S. stocks remain basically steady, maybe a little bit buoyant this morning after the comment by the president yesterday stating we will not default. Talks continue without him as he visits Japan for the G7 meeting. Hot topics are very likely going to be the U.S. debt ceiling, Ukraine, and China, among other things, for discussion at the G7 meeting. Walmart earnings rounds out the retail earnings this week, beating expectations on both earnings per share and revenue. Crude, which, by the way, you should be switching to the end contract today, maintains yesterday's breakout move to the upside, really kind of range bound overnight. We're going to see all of this in the chart shortly. The VIX this morning down a little bit, 16.88, 17.65 yesterday at this time. The dollar continues to leak higher, 103.14 higher again this morning, 102.94 this time yesterday. And the yield on the 10-year also a little bit higher, 3.6%, where it was 3.5% yesterday. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep. And make sure you subscribe to our YouTube channel so you can get notified when we do go live. Today, it's Make Hoag Money. Here's the link to join the Zoom meeting, or you can watch on YouTube as usual. Here is a link to something that is new on Zoom. It's coaches' office hours. Our one-on-one coaches get together on Thursday for about an hour and a half. Usually they'll have a special guest. I've been on it a couple of times. Some of the other coaches and traders here at Top Step have been on it. Some outside traders have been on it. It's an opportunity for you to spend even more time with the Top Step coaches. That's at 11 o'clock today. That starts, goes all the way till 12:30. Bring your questions, bring your ideas, bring your thoughts. We look forward to seeing you there. It's also Thursday, which means we should be having a podcast at the end of the day at 3 o'clock. If not, we'll see if I can have a reflection at the end of the day. We'll see how this all works out by the end of the day. And again, we are working on really improving the offerings with Top Step TV. We've got some new things going on there. better production, better view, better everything. So we're looking forward to hopefully getting that started next week. We've had a couple of tries, and through trial and error, we're going to get this thing right, and we hope you're going to love it. So, good morning, everybody. We've got Shaw first in the room winning the prize this morning. Lacey says good morning to everybody. And yes, pretty much a yawn when those numbers came out this morning, right? Do you think the focus is on the debt ceiling? Jay, good morning. John, Alejandro, Will. Yeah, it always seems like it's a house of cards. It's been feeling like it's a house of cards since pretty much I started trading. You never know when the things are going to fall apart, and we just try and stay out of the way or get on the right direction when that does. Got a couple of interesting things to think about here in the equities as far as looking to buy weakness if that is part of your plan. We'll look at that here on the charts very shortly. JD, good morning. My brother Tom is with us this morning. It's great to see you, T-Bone. Love you. Pete, Rooster, Joe, Tranquility. I added that this morning to the opening. Always some good words here from Joe. The Rooster increased open interest yesterday. It's hard for me to buy this markets, but still seems like buying weakness is the right play until it isn't, right? ACH. Anything can happen. Will agreeing with him. And you said something here, Will, that I used to say quite a lot. When we sense that our time frame traders, the pea shooters, the retail traders, the folks that are going home flat every night, when we sense that we're all one direction, I used to call those lemming trades, because everybody piles in, and once everybody's in, they all fall off the cliff, right? It's funny you said lemmings this morning. I was kind of chuckling to myself before the prep this morning, because I used to say that don't get caught in any lemming trades. Andres, good morning. Scott saw, and he conquered. Brian, Jason, Lewis, Anissa, good morning. Rusty Golfer. Casey, Elena, Rooster, taking 2 stabs at buying weakness. If I get stopped out, I'll consider taking the other side. Feel like news will be the reason for the switch, but no one knows. And of course, we don't know. It's not like, if anything does come out about the debt ceiling, it's going to be timed or even, signaled that there is something coming out, right? Good day, Gnostic. Mitchie, good morning from Spain, or maybe good afternoon there, right? Kevin, good morning. Anderson Equity, good morning. Took my trading to a whole new level and got a great mindset since you started. Oh, well, that's very nice of you to say, Anderson. Really appreciate that, and it makes me feel good. That's why we're here. We want to help. We want to, we're looking forward to all of your success. More success, the more the better, right? Andy, Mark, Ashraf, Ash, good morning. Haggle Matters, JD, good morning. Jason, good morning, sir, to you. Sarah Hall, as always, prayers and love to you. Shy T, Feds Logan just said, data doesn't support skipping a hike in June. Uh-oh. JT, good morning. Casey, won a free month in the 150 combine from Patrick Whelan's YouTube channel yesterday. Nice. Starting today. It's good to have you back, Casey. Very nice to see you. Perhaps they won't quit hiking until there's term premium back in the yield curve. Boy, that's going to be a trick, isn't it? It feels to me, Kevin, like that's going to be 2025. I don't know. We'll have to see, huh? Grounds Hero, good morning. Oh, Stephen, Bill, D.A., Kevin, woof, Lacey. There you go. Lacey saying good morning to everyone. Poor lemmings, right? Dr. VJ, good to see you. Vlad, George. What were your trades yesterday morning? Well, you left the opening range at the high of the day. That was a short. We took price right down to the base of the late spike lower on Tuesday. That was where I got out and got long. I did not catch that whole move, but I caught a couple of really nice trades early and took them home. Bruce, good morning. Dan Trader, Brody, Jeff, good morning. Survived another day without blowing an account. That's a good thing. Trying to focus more on risk and less on profit, and focus on your process. Focus on your strategies. Stay in your strategy. The only way you're going to be able to have information that you can use to analyze your performance of your strategy, of your process, is if you stay in it. Edward, awesome group coaching yesterday. Been trying to figure out TPO settings forever. Excellent, Edward. I'm glad that we were able to take care of that for you. And we're going to take a look at those TPO charts here right now. Again, make Hogue money just after the prep, and we'll see how the rest of the day goes. Don't forget, office hours with our one-on-one coaches at 11 o'clock today. We'll look forward to seeing you there. All right, let's jump into the charts. Let me get things a little bit set up here as usual, starting with the daily in the S&Ps. And we did see a pretty decent jump in open interest on this little pop that we had here yesterday. That's encouraging. The medium time frame market state, however, remains in balance. The short time frame balance, we've sort of broken out and tried to accept above it. That open interest increase says, you know what, there were some buyers that came into this market, some new buyers, depending on who they are. We'll see how the day plays out. And there's a couple of good reference points in the profiles we're going to check out. So the short time frame breakout continuation did a pretty good job, but I can't really add an auction grade because this market is still largely in a two-sided medium time frame auction, two-sided auction. So it's not really auctioning either direction in the medium time frame. Short time frame, it did a pretty good job yesterday. 4 billion shares traded in New York. We had a boost in volume here, 55,000 estimated additional positions created yesterday, indicating, again, new longs coming in. So if the auction did a good job yesterday, what does that mean for us today? Well, we've got the weekly kickoff high, which is, by the way, 41.94. It's the point of control from this day here. It's kind of a prominent point of control. If you remember a couple of weeks ago, 42.06 was our weekly kickoff high, and we traded in essence right to it. We went a tick through it, and that put in our recent high. So looking to see if maybe we can get to that point of control, that weekly kickoff high, to push some more longer time frame traders into the marketplace. Again, we may have seen a little bit of that yesterday, but there was no delta divergence. There was no indication that there were longer time frame. We'll see. Take a look at this on the TPO chart here shortly. Last week's high certainly in play, and again we brought in new bets. So the short time frame auction to the upside in one day, just the auction yesterday. I'm giving a B plus, but in the longer time frame, medium time frame, we haven't changed the market state yet. Here's the 30-minute chart. So we had been watching a descending triangle. We broke out above it yesterday, and we got some legs to the upside. All right, well, that's what we might expect. The market had been coiling. We did add open interest. We had a double distribution trend day. The market closed pretty well. Now, I'm kind of looking at this as an important level. If we have some meaningful participation below this level in these single TPOs down here, then I'm going to be really patient if I'm looking to buy weakness. We could see this market go into repair from point of control here to a volume point of control here, which brings us down to this trend line. We could come all the way back down there before really finding the opportunity to buy that weakness. We looked a little bit different here before 7:30. We're getting some reaction here, and the market looks like it's going to open in the area of repair. I told my buddy here to watch the overnight low, which at the time was pretty much right at Well, it was right here. It was pretty much right at that level. So overnight inventory long? No, not anymore. Looks like it may be actually getting short. No gap. If we were to open where we were up here earlier, I would say there was probably a low probability of a repair day. That probability has increased as we get closer to opening in the repair area. Here's the TPO chart. So double distribution trend day. If you were watching the charts yesterday, we had a weak low. We had a couple of anomalies in the lower distribution. This area right here, where we kind of left the single prints, the single TPOs, the area of excess below the distribution that was created at the end of the day yesterday, should be supportive. If we get into it and we start taking too much of it out, something may have changed, and then we may fall into repair. With the auction that occurred yesterday in the short time frame, I still am feeling like I'm going to be looking for opportunities to buy weakness until we're not. So 41.27, that number that kept coming up all week for me, is kind of that pivotal area. If we manage to get down there and we see some meaningful price action down there, then the whole upside game would be off for me. But again, are we going to see that today? Who knows? Overnight low, critical. These single TPOs, these single prints, critical. I don't want to see too much participation below this level. Okay, we probably just took out a whole bunch of stops below there. You're going to see what happens as the day goes on here. So the initial balance low, yes. Decent move to the upside, low excess, high excess below this distribution. We get too deep into it, something may have changed. Be really cautious looking for longs if that's the case. At least this gives us an idea of an area to limit risk, and that's really our goal here. I don't know if you noticed, I did wear my rally sweater. So I'm doing my part to see this continuation to the upside for all of us. Anderson, I'm a big fan and student of Jim Dalton and his books, Mind Over Markets and Markets and Profile. So that's probably where it is, right? Here's that composite profile that we put up yesterday. This is the entire month of April and to this point in May. Okay, we are in this low volume node here. Okay, that's our low for the day. Supportive, unless we get through that low volume area, then we may come back down and check down to point of control or volume point of control all the way down here, which kind of puts us near that trend line. I don't look at composites all that much, but we've been in this balance area for so long. This one looks like it might be kind of tasty. Let's look at crude oil. It's just opened up. Nice, Bruce. I suggest everybody take those courses if you can. So this is the July crude oil. Volume is much bigger. There's a 10-cent premium to June. You don't really have to change much of your lines and levels. It's only a 10-cent difference. So the breakout above the trend line yesterday was directional, but really a hard read due to rollover. Open interest, we had a loss, but that doesn't mean that we didn't see new buying come in. It's part of rollover is that the volume and the open interest becomes very blurry. We're holding against weekly kickoff high, which if you add that 10 cents, 72.90, 72.97 is our overnight high. So we're still seeing some resistance here at this weekly kickoff level, Well, we know that our longer time frame traders are working on getting a cheap rollover and not worried too much about directional trade. They've had a pretty decent rollover, I would have to say. So we're going to be looking to monitor for other time frame information, but I think it's going to be hard to, again, to see because of the fact that we are in rollover. Here's the 30-minute chart. So here's the pop yesterday, losing open interest overall, but again, rollover makes it difficult. Overnight inventory started pretty flat. We've opened and we've kind of looked like we're going to be in repair today. So repair means high volume node point of control, volume point of control up here, high volume node down here is a potential target or potential extremes for the session today. The market's opened in range in value after a double distribution trend day. So this makes it a little more easy to see, right? You've got the point of control from the lower distribution, probably right about here. You've got a point of control from the upper distribution right up here, and the market opens between them. Good probability of it reaching both, or at least attempting to. We have excess low, we have excess high. This is one of the markets that there was no initial balance at one extreme or the other of the regular trading hour session. Market looks to me like it's in repair here. So I'm going to stay patient. We're in range, we're in value. Stay patient. Look for opportunities up here. Look for opportunities down here in an assumed point of control from the lower distribution. Not a very confident market or move to the upside yesterday. We traded right to an anomaly already this morning. NASDAQ. The NASDAQ is the shining star of the upside momentum or move in the equities. We have upside auction is performing well. It's not range bound like the S&Ps in longer time frame. It was, but now in short time frame, we've got a rally going here. It seems to be doing well. We added 7,600 in open interest yesterday on higher volume. I'm giving yesterday and this move, which was a C++ yesterday, an A- today because we saw new buyers come into this market at higher pricing and higher volume. What is a healthy auction? A healthy auction higher, price moves higher, volume moves higher, open interest moves higher. That is a healthy auction. So we're looking at an A+ auction here. Volume, again, upside structure remains, volume, open interest. Everything is saying everything is okay here in the NASDAQ, which it has been presenting as the strongest of the three amigos. Here's the rally yesterday, double distribution trend day. The market has not traded into the single TPOs the same way than the S&P has. What is that telling us? It's telling us, again, that this market remains stronger. There's no real overnight inventory. It doesn't look like we're going to open with a gap, but if we open, kind of below the point of control from yesterday, that may lead us to some sort of an opportunity, I would say, for repair. Let me see where this trend line goes here. So we got 1, 2, 3, 4 points of contact. So that's a pretty good trend line. That's a long ways away, though. So at this point, with the overnight low intact and maintaining price in the upper distribution or above it, less likely to go into repair and refill the single TPOs here than the S&Ps. Both lows weren't very strong excess. As a matter of fact, I think the S&Ps put in a weak low yesterday. Low excess low here in the NASDAQ, but we've got excess below price. So kind of looking at the NASDAQ as possibly a better or stronger upside move, which it has been. But again, we have not taken out or come into, even in the overnight session, any of the single TPOs here. This is excess below price. If we take out too much of the excess, something may have changed, and we're going to be patient looking for longs at lower pricing. If we hear anything about the debt ceiling, I think they're going to be really cautious. I don't think that they want to knock things around too much, but you never know. They may do that just to prove politics. Schmucks. All right, gold. And yesterday and the day before, we have yet to see this downside move garner any attention. On the 15th, we lost open interest of 14,000. Yesterday, we lost open interest of 22,000. People are getting out on the downside here, not getting in. Now, that can change. Today may change that. We're starting to see maybe a little momentum coming in here. If we start building, even the volume yesterday was lower. But if we start building and we see momentum, maybe there'll be a delta divergence today that could give us a kind of an idea that, okay, we've attracted longer time frame traders now. So far, everybody's been getting out, not getting in. So I'm giving this downside auction a little less than an average, a C minus, because we're not seeing volume and open interest coming in the downside direction. So far, it's been ignored. And it's not going to be ignored. Let's see what happens. We've got the dollar, which has been rallying all week long, which is part of the reason why I think, you're seeing gold getting hit, but it's not attracting new business. It's getting out of old business. This may change that, right? So we've got an old gap down here. We've got naked points of control down here. There are visuals down here. Looks like we opened with a gap. We'll take a look here and see if it looks like we closed the gap, but the gap closed resistant. I don't want to fight this downside move. I'm not going to try and pick a bottom in it, even though I don't think so far that it's been a healthy downside move. Certainly don't want to jump in front of any freight trains because, as we know, that can change in a heartbeat. One thing that could signal a change in that is if the dollar starts coming off these recent highs and starts heading lower. So I'm still looking for new business to come in here. Just don't think it's been doing a very good job. Maybe it's got an attitude now. Maybe it's going to continue. Maybe it's going to build some open interest on the downside here. It needs new business for downside continuation. Here's the TPO chart. Yesterday, day before, we talked about the fact that it wasn't a very confident move to the downside, and we did lose open interest that day. Here, normal variation, neutral day. Losing open interest on an overlapping to lower range and flat out lower value. Gap close, resistance, continuation to the downside. I don't want to fight this. Our good friend, Mr. Anderson, our good friend, Mr. Dalton would tell you the biggest mistake traders make is fighting a directional market. And this is a directional market, although I don't think it's doing a very good job. Dalton always says, what direction is the market attempting to go, if any, and how good of a job is it doing getting there? So far, I don't think it's been doing a very good job. But I'm not going to jump in front of it. Not going to do it. Not going to try and step in front of a market that is directional and one time framing to the downside. Kevin pointing out that real rates are the other heavy influences on gold beside the U.S. dollar. You're getting a good rate for your money. That's where your money's going to go. Isn't that right, Mr. Laffey? Excuse me. Goodness. So, here's the euro, which is also heavily weighing on the dollar. Dollar continuing to move to the upside. How is the auction going in the euro? Well, we added 2,000 in open interest yesterday. the bear flag that we pointed out that broke out yesterday, adding 2,000 on higher volume. Well, given this auction kind of a C plus, maybe even a B minus, because we're seeing what we want in a directional market. We're seeing additional open interest and volume, not less open interest and lower volume. So don't jump in front of this one either. The problem with yesterday was the break of the bear flag happened in the overnight, which complicated our opportunity to try and get into that market. Matter of fact, it pulled off the low pretty well. Seeing it continue to the downside here. Here's the 30-minute yesterday. This is why I was kind of bummed yesterday, because the breakout below that level occurred and drove in the overnight. We really kind of ranged yesterday. We actually closed pretty well. We closed this gap, closed this TPO, this point of control. Now the market looks like it's ready to continue to the downside. Again, another opening with a gap close, resistance, continuing to the downside. I'm not stepping in front of this one either. If I can't get into it, I'm not going to try and pick the bottom. I think that's one of the problems. In a directional market, it's difficult to try and get in that direction. So we say, well, if we can't get in that way, we'll try and pick the bottom. We'll go the other way, and we'll see what happens. Bad idea. Bad idea. Here's the TPO chart. IB, neither side. It's a normal variation day, neutral, low excess high. We left a gap up there. We had a low excess low, low excess low, low excess low. You think that the profiles were saying something, that the downside auction wasn't finished? 1, 2, 3, 4 weak or low excess lows in a row, and the market continues to push to the downside. Continuing to push to the downside. We've currently got a weak low here. Don't see any reason to buy this thing. At least not yet. Let's take a look at the 10-year, and then we'll get moving on here, because we got to get to make Hogue money. So we've got a potential market state break. We've been range bound since, what, middle of March? Potential breakout here. Open interest has been continuing to pour in this shorter time frame auction. This auction is getting this short time frame auction is earning a B plus from me. It's been one time framing lower for 4 straight days and increasing volume on every day. Increasing open interest, I should say. Volume has been a little bit iffy, but we're going to see how the volume does today. Take a look at the 30-minute chart. Open interest, again. Did we gap lower? We did. We had a gap lower. We filled an old gap. Weekly kickoff low in play. There's likely to be some big fish around here. And it lets you limit risk as well. Not looking to buy it. Unless we really show some rejection below this weekly kickoff low. Not looking to buy it. Here's the TPO chart from yesterday. Excess high, excess high, excess high. Weak low, low excess low, weak low. Telling us that the downside auction has not finished yet. Don't try and pick it. Let the downside auction pick itself. Pick its own low. And then maybe go the other way. So if you can't participate on the way down, it's one of the things that's always been a challenge for me, is getting into a market that's already directional. If you can't get in on the way down, don't try and pick the bottom and so you think you're going to catch that. And the natural gas, we're inside extended trading hours from yesterday. We added only 200 in open interest yesterday. Volume was off a little bit yesterday. It seems this market is taking a little bit of a rest here. Every market needs a little rest once in a while, right? So here we are, overnight inventory, just a little bit long, very indecisive open here and pre-open. We got 3 dojis right here. There's not a lot of confidence in either direction in this market. I don't think I would even be touching this market, even if I did trade it. and a potential for repair. You know, we had a double distribution yesterday. We opened outside of it. We came back inside of it, tried to close inside of it. Now we're between the point of control here and a point of control here. If the market is resting, it's likely to kind of run auctions to the upside that'll fail, auctions to the downside that'll fail. It's you know, if it's going to range, it's just going to rotate in here all day long, if that is the case. We never know. That is a hypothesis. And if I were going to be trading it, that's the hypothesis that I would monitor for truth. If one of your hypotheses shows that it's becoming true, that's the hypothesis and the strategy you trade with. Right? Alrighty. So we're going to get to Make Hogue Money. I went a little bit long here on the prep, but I'll get Make Hogue Money running as soon as I can. We'll try and catch the open here for the S&Ps. Looking forward to seeing you all there. Let's take our deep breath. Stay humble, grateful, creative, centered, and tranquil today. Be good to yourself. Be kind to others. Say a prayer for peace, and we'll see you in a couple of minutes. Have a great session if I don't see you. Blessings.